Hello, fellow traders. Tis I, the Rumpled One, coming to you on Thursday, July the 7th. The year's 2022. Let's talk trading. Losing with Walmal. These videos are for educational purposes only. Your results may differ from mine. Walmal, we talk about, winning a lot, but we don't talk about losing. And, there's good losses and bad losses. Um, there's losses that are within your trading plan and losses that are outside your trading plan. That's what I would say would be good and bad losses. What's your take on losing?
Well, losses are one of the things that every one of us as traders have to deal with. Every one of us, if you take trades, you're gonna take losses. You're gonna have trades that go out there and it's just not gonna go and go your way. That's just the reality of the situation. And there's a psychology that's built into that. Nobody likes to lose. I mean, even when you're being clobbered, sometimes you don't like to lose. And that's something that can really get nasty real quick because this type of situation, you go into the trade, it goes against you. Oh, I know it's coming back. All my analysis is correct. All this, all that. I can't take a loss today. I've had too many losses this week. I've had too many losses today. I need to go and pay the mortgage, and all those things start flying through your brain, especially when you're a newbie. But, I'll go and tell you, I'll say that even pros, they go through the same battle, and what happens is then all of a sudden you jump in and you go and compound your problem by maybe leveraging even more, and it goes down and continues, and you didn't leverage because you had a good trade, you leveraged in because you can't avoid a loss. You can't have a loss today. It's just not there and available for you. And then you just make it worse and worse and worse. And next thing you know, you put your account at risk. And, you just can't do that. And that's just what it is. That's what just happens. And, losing is just a natural part of trading. It's just something that's going to happen, whether you like it or not. And if you don't like it, and you don't like it to the extent or to the extreme of that you're going to do whatever you can to make sure you never lose, I'm going to go and say something a little controversial here and say maybe you need to go and figure out something else. And maybe trading's not for you because, I have really good days like today. My efficiency is 98.48%. Which means I took one loss out of about 18 trades, which was a really good day. But there were days this week where my winning efficiency was like 53%. And that's you're just going to go and take losses, and you just got to go and accept the fact that that's going to happen. And one of the things that, I've talked about this in the past is that when you take a trade, and especially if you take a loss, go back and look at the trade, okay, and analyze the trade. And you need to go and be honest with yourself, okay, because that's the only one that really matters is yourself. And you need to go back and look and, why did I take the trade? Was it a good trade? Did I actually follow my rules? Did I follow my strategy? Did I airball this? Why did I take this loss? And you can go and say, yeah, I did everything right. And I took a loss. And I'm going to go and say something right now that some people are going to shake their head at me and say, you can take a loss and that's a win because you did everything right. Because if you know your strategy is good and you did everything right, in my book, that's a win. You just got a negative number in your bank account, and if you followed all your rules and you got rules in place to make sure that you never jeopardize your account, you never jeopardize anything that matters, that's just part of trading, and that's a good thing. The problem is that a lot of us, though, when we look at the trades and we start analyzing what we do, we start going and rationalizing. We start going out there and making all these rationalizations. You know what? I went and took this trade and I did this wrong and I did this wrong, but I did this wrong because of this over here and I did this wrong because of that over there. So, it should have been okay. No, you didn't follow your rules. That's a loss.
Yeah, and sometimes what'll happen is you might be in the trade and you might be up a pip or two, and you're thinking about getting out, and then the next thing you know, the market moves in the blink of an eye, and now you're going to have to take a loss because the markets, took away the opportunity that you had to take profit.
Oh yeah,
And that's the
I told,
yeah, that's those are the ones that are really hurt.
yeah, they hurt your psychology, and they hurt you, and let's be honest about it. It hurts you emotionally too. I told you yesterday about a trade. I was in the trade and I was up almost 5 pips. I think it was up 4.7 pips, and I wound up taking a loss of like, zero point 0.3 or zero point 0.4 pips. Sort of like, good grief, what? And the thing was, when I went and hit the exit button, it looked like the market was actually moving in the direction I'd want it to be moving. When I was getting out, I just hit it, and it just, literally one tick dropped down 5 pips or whatever it was.
Right.
And that's just what happens sometimes.
Yeah, it's like a bad beat, when you're playing cards or something.
Exactly. And that's actually a pretty good illustration or analogy there, Tiro. Think about it. I like to play spades. And the thing is, when you play, one of the reasons I like to play spades, I think it's very analogous to even trading, is because when you're playing spades, you've got the folks that you're playing against, so they're unknown variable, but you got an additional unknown variable, and that's your partner. Your partner can do some things that can really mess you up, and it's sort of like trading. You got all these things going against you, but when you get into the pattern, and you start grooving in it, you can do really, really well in that game. And that's part of trading too. You get into the groove, and when things are going well, and you're firing on all cylinders, you're seeing what the market's doing. The market's moving and behaving the way the market should normally behave. It's like hitting. I'm using way too many illustrations today, but it's like when you play baseball and you hit the meat of the bat and you hit that sweet spot, or you're playing tennis and you hit the sweet spot on the racket. There's no feeling like it, And I guess maybe that's part of the attraction, but at the same time, you can be playing baseball and you think you got it all lined up. You're about to swing at the ball, and the pitcher threw some strange dropping fastball with some type of spin on it, and at the last second it just goes and drops on you, and the next thing you know, instead of hitting the ball squarely in the meat of the bat, you wind up hitting it on the top of the ball and squibbling it out, and the third baseman just runs up on it and throws you out.
Yeah,
that's like trading.
Yeah, well, I put the pound dollar up on the 1 minute chart with the Walmal lines, and you notice price just dipped down into the what I call the launch pad, anything from 40 to 49. So let's see, we had a low of 49.5. So you could have jumped in. Actually, no, that wasn't the low. Why isn't this showing me the low? The low was 47.5. So you could have jumped in, at 48 or 49, and right now you could be up, 5 pips. Now the question is, do you take those 5 pips, or do you, take more? And so, and if you look, just a few minutes ago when it crossed the 50, it got all the way up and actually hit that 58, or got close to it, pulled back, then went across it, and then went down. I mean, this is where those first couple of pips are pivotal in the sense that if you jump in the trade, and if you're using 1 minute candles and that candle closes and you're up 2 or more pips, you have a little breathing room. And then that next candle is usually the one that'll wiggle me out, because if it drops down and shows red, a lot of times I'll punch out, and then it'll do just like the current candle's doing, except this one didn't drop down, so I wouldn't have gotten wiggled out.
Right, and that's the thing. You need to go and build a strategy around it and just be consistent about how you do it.
Yeah.
And that's the thing. Like for me, Tiro, you know what I do. If I get in there and I make a certain amount in terms of money, I just jump out. I just go and take the money off the table, put it in the bank, and I say, you know what? I'm going to have this set up probably 30, 40 times today. So I'll just go and wait for them and wait for them and wait for them and just take them. Just keep on taking them and put two, 3 pips in the bank every time. It's, for me, you like to call it stacking bricks, and that's exactly what it is. You just taking a little bit at a time. You're not going to try. I'm not trying to get that big run. Other folks, on the other hand, they look at this and say, "Hey, this is something that could, potentially run pretty big." I don't look at it that way. I'd rather just go put a little bit of money in the bank. That's it. Because if you look at the market now, we're almost back to where I would have entered.
Exactly.
We're now back to where I would have entered.
Exactly.
All that money I would have had would have been all gone.
Right.
So
and
that's why I don't do that.
You could be taking a loss right here as opposed to having that 4 or 5 pip win.
Now, if you were a different type of trader than me, then you would say, you know what, that's a great opportunity, because some traders with their strategy and say, okay, yeah, I went in, that was up 4 or 5 pips, that's great, but I'm looking for much more money. Oh, great, look, it dropped all the way back to my entry. I got another chance to put some more money on the table, and they look at it that way.
Yeah.
And so it comes down to who you are and how you're going to trade it. Like I've said this a million times, on this channel, and that is that I can't make a decision for you. That's something that everybody's got to make, because here's the reality. We're talking about losses, and depending on your psychology will drive more losses than just about anything else. For me, I'd rather put the money in the bank and walk away, and if it drops down again, great, I can go in a second time.
Yeah.
And do the same thing over again.
Okay.
That's the way I look at it.
I got a quick question for you though. When you take a loss, is it just that one entry, or is maybe you have 2 or 3 or more entries, and when you get out with an overall profit, even though one of those positions that you took or one of those trades that you entered is actually a loss?
Yes. It's all of the above. Yeah, so there are times when I just go into the trade and it goes against me, and there's just no, look at it and say, okay, I went in and it was just not a bad trade necessarily by me taking the trade, but the market just didn't do what I wanted to do. I don't think it's going to come back. I just take the loss and say, okay, that's 3-4 pips that I'm just going to lose on. Or what will happen is I'll come in and it'll go against me a little bit and I'm down a little bit. Okay. Well, and I go and enter a second time, or maybe even a third time. And that first entry was just too far away from where the market was actually going to go. But the other 2 entries go and put me into profit, and I'll exit there. So what happens is I'll be in 2 or 3 trades, and I'll have 1 or 2 winners and 1 small loser. So yes, I do both. It just depends on the situation.
Yeah, so if you notice now, we just came out of that same area. Let's see, price had a low of 47.8, so you could have gotten in at 48.49, and you could have picked up 10 pips.
Yeah, see, the way I would have played this is I would have gotten in probably at about 42, and I would have gotten out. I'm just measuring it right now. I would have gotten out.
It didn't get down to 42 on my chart.
Well, I'm talking about the first trade when we first got on the call. I would have gotten in at 42 on the very first trade.
Wow.
I would have gotten out with 3 pips. And then I would have then when it came back down again, I would have gone in again somewhere around probably right at 40. I would have gone in. And then, but the nice thing about that is that this time I could have picked up 8-9 pips.
Are you looking at the 1 minute chart? Because on mine, we didn't get below 47.
I got all the way down. I'm sorry, I'm reading the chart wrong. I'm sorry, 52 is what 50. I meant to say 52. Sorry.
Oh, okay.
So I would have gotten in at 52, and I would have gone and picked up 3 or 4 pips, probably 3 pips. And then the second time when it came down again, that time I would have gotten in at 50. Okay, and that time when it came in at 50, even though the candle was black at that point in time, I would have gotten in at that point because it was coming back and it was recovering.
Right.
And I would have gone in again, and I would have stayed for the first full minute, and then on the close of the second minute, I would, or halfway through the second minute, I would have gotten out.
Okay.
Up probably about 5-6 pips.
Okay, traders, losing's part of the game because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One over